All right. Hello, everyone, and welcome back to another Pepperstone live session. My name's Thomas Atkinson, and today we're going to be talking about everything from the stock market and the US 500 indices, all the way through to, of course, the currencies and gold and commodities and even a bit of crypto. There's a lot of stuff going on because we're about to find out what's going on with inflation in the US, which is pretty much the most important figure that comes out. And on the same day, as a random beast of coincidence, we also see the Fed come out, Ty. So yeah, I think this only happened, I think it's like 8 or 13 times since 2008 where we've had them both sitting on the same day. And it makes me think there's some interesting numbers to come. And I'm pretty sure today's going to be some fireworks somewhere. How you been this week?
Good. Yeah, I think it's been a good week of trading so far. Yeah, welcome everybody and thank you for joining us. The levels we were talking about, I think last week, a lot of them have actually played out quite nicely, and there have been some pretty good trades over the last few days. So hopefully you were able to take part of those, but we're certainly going to check all of those out and see if we're going to find some more opportunities, Tom, leading into what is effectively a pretty big news. There's always news every week. There's news, but yeah, it is interesting that they're doing that all on the same day.
Yeah, for anyone that's new, by the way, the biggest bits of news generally each month, well, the non-farm payrolls, which we saw, usually it's the first week, and that usually moves currencies and commodities the most. And then we get at the moment, the inflation figures, though usually the inflation figures are not as significant as they are right now. Anyway, let's get into it. There's a lot to go through in terms of charts. And of course, we've got a lot of patience that we need to be setting up for time because there will be some reactions off these key levels. We'll join you just after this quick risk disclaimer. And hello to everyone that's joining us in the chat. I see you guys right there. Okay, so let's take a look at the US 500 to get started here. And I think the thing with the US 500, Ty, is it's all about the 5400 zone. And that's something that we're maybe going to see touch today. And what I thought I'd do is change things up a little bit. Let's actually go from a top-down approach on the US 500 and learn a little bit about some of the key levels that we could be focused in on. And what you really want to start doing, whether you're a scalper, day trader, or even an investor. So the first thing I always like to do is I always like to have some form of psychological numbers marked out. In this case, 5400 is one of those round numbers that I think a lot of people will be looking towards. When you break through 5300, the obvious answer is 5400. That today as well, there seems to be a decent amount of trade kind of options concepts between 54 and 54.15. So somewhere in there, you can already start to see what I would say is possibilities of resistance. This will be an area where if the market comes out and you get that really quick movement up thanks to the CPI number doing whatever it's going to do, and that injects into this area, this could be where a bear sells or someone starts to take profit. The other thing that I like to do is I like to use the fixed range volume profile chart. So if you have Pepperstone connected to TradingView, then you'll have access to this. And what we've done there is we've just done a quick analysis of this previous area, because what you'll notice is we have a lot of long leg dojis here. Basically, we have consolidation or equilibrium of the market, where the market sat there for a while and it's breaking out in anticipation of this inflation number. But if it comes back, where do we think there could be a buyer? So this is often what I do. And this basically shows you the most traded zone through this range. And it's a very powerful technique, isn't it, Ty, that I think is being utilized now by a lot of investors and traders. And what you should do is use the smaller time frame here, because you can see it's a little bit different, and then go over the range itself. And although that gives you the same result, that's what you're generally looking for. And what I like to do is mark this out with a ray. Pretty powerful concept, yeah, around here, Ty.
Amazing. And I think that it really, especially when you're seeing candles that are actually playing the game for what you're actually looking for. Like I think that understanding candles and candle structure is extraordinarily important when you're doing your analysis. But what it enables you to do is actually take a very quick view of what the market is actually trying to tell you, and then you break it down. Like, you don't want to be doing analysis on something that you don't really understand. If you're trying to understand the market by doing volume profiles and things like that, you're probably going in the wrong order. You're putting the cart before the horse, so to speak. What you need to understand is the candle structure in the first place, and then you can break down the volume. So firstly, you want to identify the zone by looking at what the candles have actually done, and then break down the zone further by going to the smaller time frames, then doing the volume analysis on that particular area of interest. So because the thing is, look, it's like a trend line, Tom, isn't it? You can draw a trend line anywhere. Really, they're very subjective, very similar to the volume profile. You can draw that basically anywhere. but is it really going to give you the information that you need? First, you got to look from the top down. Okay, you got to identify the area, understand the candle structure, and understand the areas of interest. And that's where the volume profile really comes into its own, because then you can really understand what's actually happening there, but you know what's happening in the bigger picture. And I think that's really important to remember.
It really is, and this is where also we're starting to break down what our thoughts could be leading into such an event. So I think it's pretty clear that everybody sees a bullish position here. And Ty, we've got a question about MACD, which we'll use in a moment, so we can tap that on. And basically speaking, let's say we did end up making it up to 5,400. Funnily enough, if I project out what a Fibonacci would be doing if it went from a low to a high here, you might notice that right around that most traded zone, we end up getting what's called the golden pocket or the golden fib level. So this could therefore become a theoretical area of interest. So let's say the market did go up like this, reject. Do we think there could be a buy here? Well, the answer is there certainly could be, and it would be in the direction of trend. It would be a pullback. It would have more evidence. All of these things would start to come into play. And I think that's part of the way that you do this. Another couple of things that I would break down the charts with here I'd probably also put in something like an anchored VWAP off the low, just to see if that also starts to conclude a very similar situation. And I would then possibly look at a few other indicators. So what we'll do is we'll add on the MT4 MACD. So, oops, not symbol search. One second. We'll add an indicator here. And we're going to search MT4 MACD because this tends to be Tyron and my favorites. And what you'll notice is that we have, and you're always going to have this around this point, considering the price action, you've got what we call Class A divergence. So basically, we've got a fairly heavy divergence between a higher high being made by the market, but obviously not necessarily being agreed to by the MACD and therefore the moving averages there. So Ty, what does this tell us about this chart? It doesn't give us enough evidence to instantly short or anything like that, does it? But it says,
it doesn't.
Pay attention.
It puts you on high alert, especially at around a level where, 5,400. Look, don't be surprised if it gets to 5,398 and then completely rejects from there. It can happen very, very quickly. Or what it can do is go to 5,420 in a heartbeat, because a lot of people try to be cute. They'll short it at 5,400 exactly. They'll put a stop loss of 5,410. You've got to be very, very careful around these levels, because the market loves to screw around with people who don't really know what they're doing, doesn't it, Tom? Like you want to be very careful. You want to give it a little bit of room. Don't be tricked into thinking that the 5,400 is going to pull it up like a train, but don't also be convinced that it's going to get there and actually go right through it either. We've seen it on many occasions where it'll get to just about, and the reason is a lot of people position themselves at that round number exactly, and you'll have a heap of pending orders there. And there's just not, the market just won't reach it, and not on this attempt anyway. So be really careful about that. Look, I'm all for proofing, and I know Tom is too. We want to see the proof. If it's going to turn around, there's plenty of time for it to jump on board and get on board with the short. But let it actually roll over first. Don't be the first person to that party. Let it roll over, and then join in the party on the way down. Once you see a series of lower highs and lower lows, once you get that sequence, then you want to get involved. Let someone else take the bait.
That's right. So it really is, trading and investing is about patience. Temperament, I think, is the word that I would use. If anyone asks me what is the most important word in trading and investing, I would think it comes back to temperament. So just in regards to that MACD question, generally speaking, you'd be wanting to see this break underneath this low here, and then say, okay, well, we had Class A divergence, plus now we've got weakness of the market. That therefore gives me that sign that I want to be maybe more negative. On the flip side of this, there are other ways of using MACD. A lot of people use crosses on things like the weekly. If the market goes from negative on this indicator here to a positive MACD, that often can be considered a bullish sign, and then people tend to be long during that period. I mean, there are many different ways to cut it, but that's just a couple of little things. So coming into today's session, as Tyrone said, the psychology level of 5,400, somewhere around there, you might see a bit of a reaction. Be patient enough to see the reaction. And if the market does manage to come back down, I think one of the key levels is going to be around 53, 56. And we want to, again, just because we've identified a level, that means we've gone hunting for the level, but we don't know that's going to react off it. So we want to see a reaction on the smaller timeframes, which is where scalpers and day traders and everybody comes in. For a bear to take control, I think this market's really going to need to get underneath the daily 20 moving average, the 5,300, and possibly even the 52 89 to 80 zone. This area here, I think, holds the final amount of bulls because we are in an upward trend, and I think we need to remember that. Anyway, the thing was here, I just want to break it down. I think quite a few of you enjoyed it. Also, shout out here, we've got Grace, Ike, Winter, Frasato, Vitor, GB, and many, many others, coming through here. GB says here, a friend of mine said, be patient and wait, let someone else take the first 10% profit on a turn, and you take 90%. Yeah, so that's what we call basically you joining the party. I like to think of a trend as a party. It's a really easy way of thinking about it. If you are early to the party, that's kind of okay, but generally you might be setting it up, and it's not that fun. Yeah, you don't really want to be too early. You kind of want to be the cool person that tries to rock up just after it gets good. So then maybe 7, 8 p.m. comes, maybe you rock up at about that point, and that's when everyone starts coming, and there's no more setup to be doing, and everyone's having a great time. That's actually when you want to be entering into the trade. When do you want to get out? When it gets gate crashed. ideally, you want to be out and recognize that. I always liken it, Ty, that there's always that one person, at parties where you say, where did Roger go? And they'll be like, oh, Roger left like an hour ago, and you just don't realize that happened yet. And that's what you're looking for in the footprints of the market. Yeah. So it's
don't wait for the sirens, Tom. Don't wait for the sirens.
Oh, no. I don't want to be you never want to be doing that. Nope. All right. So US 2000, also worthwhile watching. Just a couple of quick things here. I noticed, we'll get rid of this volume profile now, because you don't want that on top of everything. So you got a tweezer here, which could be very interesting depending on how this ends up playing out for the CPI. Pretty, not super rare setup, but certainly interesting, Ty. And I think that's something I've been having a look at over the last 24 hours. What are your thoughts on the tweezer here? If it gets above and closed above the tweezer high, what do you think?
I think the tweezers are really important in the context of where they are on the charts. Like both those bottoms of that tweezer effectively almost touch the 2000, which is extraordinarily important from a psychological level. Now, the 2000 level on the Russell is one of the most important levels in recent time because, the S&P, we talk about hundreds. So the 5,000 was important, the 4,000 was important. But, we've seen 5 or 6 of those now. The Russell has only seen, the 2000 once, and you had the 1,000. So in the context of how important the 2000 level is, it's very, very important to this. And both bottoms nearly all but touched it. And I think it has dire consequences if that manages to close underneath 2000 after a tweezer bottom. I tell you what, if this market does sell off and all of a sudden we're trading under 2000, I think that it could spell a reasonable pullback, and this may well drag the other ones down. We do know that we use this one as a little bit of a guide, being the 2000. It is the broader economy that we're talking about. And it seems like it's far away, but you know what? 25 points on the Russell 2000 is only really 1%. That could happen in a heartbeat. We could be talking tomorrow at this time, and it could be trading at 1950. So it's certainly one to watch. But I think, though, for the tweezers to play out, we need to close above that sort of 2000 and maybe 35. If we get a close on that, it's a very bullish sign, I think, Tom. That effectively off the 2000, the tweezers have held up. And then, really, as a expectation, we're probably looking at about maybe 2070, 2080 as the first profit target for that one to play the pattern out.
Yeah, so there could be some nice moves. Again, it seems to be setting up for trying to look bullish, but if it goes underneath and closes, that will be quite negative, as you mentioned, Ty. Just before we go over to some commodities and we look at gold and everything, I just want to quickly talk Dow. You'll notice that Dow's back. It's very different from the other markets. Dow's back at a supply, and it has found some sellers. So again, if it breaks through 39.2115, you get a close bullish on US 2K. I think that's quite a bullish sign for the markets across the board. For now, though, the Dow is actually one of the weakest markets along with the US 2000. So it's really just all concentration on Nvidia and some of these big stocks that are in tech. So let's move over to one of the commodities that I think a lot of you will be interested in, and that is gold. And then, of course, we can also look at silver in a moment. So basically, gold came down to a very significant low. We discussed this in some depth. We talked about levels here last week, and actually this had what could have been a pretty good trade around 23.45. And I guess I'll show it to you just so you can see on the small time frame. Obviously, first up, just this is a major support, a very important level. If it breaks underneath here, it has, I think, consequences that could push it back to 21.70. And Ty and I think both agree on that. And over here, what I want to mention is see how it came down into the news. It actually came down to non-farms. This is around the non-farm time, and there was no bid. So just because you find a key zone, it must find some form of action. If it doesn't find an action, then something weird's going on, something different is going on. And in this case, what it was China stopped purchasing gold for the first time in 18 months. Now, I suspect they will come back and purchase gold, Ty, but they're not right now. So let's have a quick look at this price action. How do you see this, Ty? Is there enough here yet, or are you looking for some kind of maybe wipe of the low, then resumption of the trend, or just kind of wait and see how the daily closes?
It's a bit of a wait and see on the daily. I think I'm pretty excited about a close below 2280. I'm not going to lie, but I think a close.
You want to kill gold?
Well, a close. I don't know about kill it, but I wouldn't mind taking a piece of meat off it and eating a little bit because
I think to kill gold, guys.
the 2280. I think the 2280 promises $100 if it gets broken. I think $100 on the way down to 2180 as the next major support for it is a very comfortable. I think it's a comfortable level because there's nothing there in between. We talk about. I'm sure we'll touch on Bitcoin a bit later on, but we always talk about those zones where we have an extraordinarily high move or a fast move, and it leaves no prisoners until it gets to a level of support. Well, that's where gold is at 2280. Between 2280 and 2180, there is absolutely nothing there to stop it from falling. And I think that when you see a big move like that, exaggerated, it comes down just as fast. And I think that's why I'm a little bit excited about that. And it's probably my preferred trade because if it does that, I think it's the least friction that you're going to get from a trade. Now, I don't really mind whether it goes long or short, to be honest. I mean, really, I think both of them are valid trades. But I think I've only got a preference towards the short because there's $100 there without a lot of trouble in front of it, whereas a long from this level has problems every $20 all the way to the previous high. So I think it's the easier trade. But I think both of them are valid. I think that you can comfortably trade both of them if whichever way it breaks out. But I think there's just less friction to the downside at this point.
Okay, well, I think silver is probably where I'm looking at for the most action in terms of being able to see whether we actually have seen resumption of the bullish trend or not. You'll notice silver here on the weekly looks really horrendous compared to gold even. And as you go down through the time frames, you can kind of see there's something trying to hold up here, but silver still remains weak. Now, what I'm looking for in particular is I want to see silver back above 29.86 and a close above there. And I think that could signify the buyer is in control. But as Tyrone mentioned before, at the moment, the bears actually are in control of these two metals. So even though we're at support, even though we're at a demand zone, don't get me wrong, especially in gold we are, it looks like at the moment, pre-CPI, pre the Fed stuff today in the decision, we haven't seen that bid come through. So I think that it is a patience play. I've actually liked this level for quite some time on gold, but I just don't see the bid yet. And that's the difference between, I think, again, success and failure a lot of the time in trading. And there was a great comment by a member of the Pepperstone community. You had a really good one, and I agree with you totally. So yeah, silver looking for it above 29.86 to start seeing some strength come back into the market. But for now, weakness I think is kind of the play.
And I think sometimes you got to take the biases out of it, Tom. And if you're just on silver, if we put it back on
silver
I'm
bullish for those, of course, long term.
Yeah, but if we put it on silver for just 1 second, we go back to silver for a second and just go to a daily chart and then a weekly chart. Put the symbol aside and put all biases aside. And what we're seeing is a series of lower highs and lower lows on an important time frame like the daily, and it trading under the 20 moving average. And I think it's very important to keep that context with you when you are looking at the next potential move. That although we are looking for a potential bullish move, from this level because it is that support, just be very mindful that it's in an overall downtrend. That the prevailing trend is down here. We've got a series of lower highs and lower lows on a daily chart, and it is trading underneath the 20 moving average. Okay, so fundamentally, if you're looking at a long position, you are trading against the prevailing trend. So I think that's all that's telling you is not to not go long. I think it's just telling you to be mindful that you need proof. You need to be patient, wait for the momentum to shift. And if the momentum shifts and the daily is trading above the 20 moving average again, happy days. But just be a little bit more patient when you know you're trading actually against the prevailing trend.
Well, speaking of which, Ty, it looks like oil was patience pays for the longer term hodler, which was basically someone that was looking at our videos last week. We spoke about this. In fact, which day were we in? We were in, Wednesday. So pretty much around here. And we were talking
Yep.
about this being a major key demand zone. So since then, we've seen a ferocious move back up on oil. Now, not that easy as a trader to get into. I think really I was having a look at this. And although it's a good position base or investment base potentially or something like that, other than this engulf candle, we didn't really see the normal structure that you would see. It's just kind of like a big V all the way up.
Yeah.
Now, I
I
think
think it was
swing
very hard.
traders, it was
Yeah.
difficult, without just saying, I'm going to buy the dip, which may not be a very good trade strategy. Remember, position trading, investing, and swing and scalping and day trading, they're all different styles. And you have to have a slightly different setup for each because risk reward becomes such an important aspect. But either way, correctly identified zone tie. Obviously, we're getting a very strong move off it. And we find ourselves back into this area. And what I thought I'd do is I'd use the same technique we used before, which is to basically roll over here a bit of a fixed range volume profile. And what you'll notice is that right around here, which is kind of where we find ourselves before the CPI data, we've reached. So this is kind of where the bear could still sit for oil and push it back down. But if oil is managing to get above 80.50 a barrel, I do feel that is going to be very strong, and that's going to mean that pullbacks should be met by bull demands. And I think that's where a lot of people start to get into that bull trade if it does manage to get above there.
Yeah, I think this $2 range that it's finding itself in between 78 and the 80 is extraordinarily important, and a break above it. Look, I'm happy to play oil wherever oil takes us, to be honest. I think it's been a really good trade for a long time now, and really it hasn't let us down too often, has it, this year? Like, it's been one of those ones where
It's giving you a lot of break evens if you were wrong.
Yeah. If you were wrong, it's giving you break evens. But for the most part, you shouldn't have been too wrong too often because it did hit the zones that it promised. Sometimes it took a bit longer to get going than you'd have expected. But for the most part, it hit most of the zones that we've always talked about. So it didn't quite get there. I agree with you. It would have been a hard one to get in on the bottom. I think I expected it to probably fall another 50 cents. Another 50 cents.
Brent did. Brent did. Brent did it.
It did.
You had to look at, remember the Brent combo. Yeah, Brent did. For sure.
I lack that. I don't do enough of that cross like you do. Tom does that very, very well. I just followed crude, and crude let me down by 50 cents, and it didn't get in.
Sweet crude, nasty. Yeah.
Yeah. It just didn't quite get there. Yeah, it didn't quite get there. But the reversal was brutal. But now it finds itself in that very happy place between 78 and 80. So definitely interested.
Do you agree though? What about an 80-50 break plus 80-60 break?
Oh, look it out.
If we get that high, do you think the pullbacks to be met by bull demand? We're on a new upward trend at that point?
Yeah, 100%. And I think that then that really opens up the 82.50 and then 85 as a longer term projection. I think it could get there very quickly too.
Yeah. I think these levels all get opened and oil becomes much more interesting once again in terms of at least buyers that come through. Just quickly on copper, I'll just mention they're sitting right on that watch reaction here level we discussed several times, 450. You don't have to trade copper. It's just an interesting one to look at because this is the sign of the metals market right now. All the metals are sitting majorly on demands and they're awaiting that inflation figure to do their next move. Now we move to the US dollar. Now, the US dollar was a absolute non-farm payroll special, Ty. It took the low, which you can see here, instantly after the non-farm payrolls on the futures and then drove higher and higher and higher. And actually, you and I were both looking at potential shorts in here, but we know very well when non-farm goes one direction, then it goes the opposite direction really quickly, and it steals a lot of stop losses. It tends to continue in that direction for a while. And now it finds itself at this supply zone. I think this is paramountly sitting on resistance at this stage. And I don't know the direction yet, but I can tell you that you can see the market has started to build structure. So what if it goes underneath 105 flat, Ty? Do you think that is starting to signal weakness on the small time frames, considering where it's at now?
Yeah, I mean, it's done a really, really big move. I mean, and we were talking about it. It was the last line of defense at 104, no question about that. That 104 to 104.20 was like a battle zone. And if it broke that, we were in serious trouble, I think. But it managed to hold again. And not only did it hold, it blasted through. I think that the next move, look above 105.50 and look out euro, I think. But you're right. If it rolls over from here, yeah, I think it's got a bit of support though. I think that it's got support at the 105 flat. It's got support again, a little bit of support at 104.80. There's a bit of support there, and it blasted through it like there was no resistance at all. But I wouldn't expect the same fall. I think that even if it fell from here, it could be a little bit more gradual than the blast.
Do you think that was a big change? That steel was part of a much bigger movement?
I think so,
especially if we get through 105.50.
If we go through 105.50, I think that we have to change our hats on where we think the euro is going, and some of these other base pairs. And actually, that brings us probably to, it might be a good lead in to go to the Aussie USD if we could.
Yeah, let's do the Aussie USD. So it's your kind of, I guess, pattern or trade of the week in terms of your chart of the week.
It's certainly my watch for the week because from what I'm seeing on the daily time frame, it's already broken through. Now, I must emphasize, these are only scalps. We're in a scalping, swinging mode. This is not long-term positions by any stretch of the imagination. We are, long-term sideways, I guess, if you like. We've been in this zone for a very, very long time between, that sort of 64.50 to 67 cent mark. But right now, we're kind of right in the middle of everything. And we've seen it on the daily, a pretty good move down, but now it's retraced all but touch a 20 moving average. And now it's it's got that indecision kicking in. Now, with the dollar index starting to get strong again, the dollar's starting to get strong. If we get a break above that 105.50, I could see this really reversing quite quickly. And basically, I think it's got 105.50 in its sights. That 105.50 to 105.60 zone is probably my target. I'm not convinced that we're going long here, because if you look at it from the standpoint of a daily, it's got a lot of resistance right in front of it. If you look to the left of the screen, you're going to see resistance everywhere at around that sort of 66.20, 66.30, all right in front of where that price currently is. So in not too many pips away, you're going to see problems. Okay. And I always, when I see problems like that, it's problems only for the long, not problems for the short. So the short for me is the better trade here, especially if it touches and hovers around underneath this 20 moving average for a little bit longer. It could be a short-term scalp down to the previous low at around that sort of 65.80 area. But if we get a break below 65, let's call it 50, I think it really opened itself up down to for a 50 pip move. Again, they're only scalps, they're only 50, 60 pips that we're talking about. But in the environment that we're trading at the moment, that's a reasonable range, because we're not really trading much further than that on a daily basis. As you can see, a 100 pip move has been quite rare on the Aussie most recently.
Yeah, it's been difficult. So again, another one that's at that kind of like critical demand, has to find a bid. If it doesn't find a bid, big drop. Again, that would mean big, strong dollar. And of course, if big, strong dollar comes through, it works with that silver gold weakening as well, and going that potentially $80 to $100 ounce chunk, which would be massive if that occurs. So I think this is, a lot of this is on the dollar. So the dollar really should be one of the keys that you guys are looking at over this next 24-hour period, into, of course, the PPI, which is also on Thursday. So do remember that as well. So even more information coming out. Now, Ty, I guess that brings us to the next one, which is going to be Bitcoin. And maybe we could just discuss crypto here for a second, because I'm starting to think this actually could be a very interesting one moving forward. It actually did what I thought it would do, which is come back down after reaching the 72,000. Now, we've just talked about this for weeks and weeks and weeks, the 72,000 coiling, 72,000. And at this point as well, I'd like to ask, if you have questions, please feel free to put them in the chat, guys. We'll answer them right now. So make sure to put them in right now if you have anything that you want to ask. So you can see here, Bitcoin, it's come down to this 66,250. It's found a bid, and it has this little high here at 71.96. Now, to me, I don't know it yet, but if we clear 70,200, let's say 50, okay? If we clear that level, I feel like this market has just put in a bit of a trap on a lot of retail traders at that point, and I think it'll break 72.5, Ty. Because it's been coiling for a while. It would have strong momentum coming off this base, but it is predicated on being able to get through that point. Now, from a technical level, I've seen this type of thing before, and I find it to be relatively compelling. What are your thoughts here? I mean, it always predicated on that, but I like the way that it's setting up here.
I think it's trying, this is its best attempt at potentially breaking through, I think. It's done a reasonable effort to try and break through, failed. It did break through the 20 moving average, as we can see. I'm also on the side of, if we do get a break below that 66 sort of 500, we could be in a little bit of trouble. There's strong support there. There's no question about that. It's a role reversal
So
zone.
I've marked it out as
Yeah.
kind of like a 65. Yep.
Yeah, it wouldn't want to be breaking past there by very much. But I think if it did,
that's bad.
Yeah, it's pretty bad. It's pretty bad.
Yeah.
I think low 60s will be coming. To a store near you very, very quickly. But at this stage, I think it's still going to launch up, and I agree. I think if it breaks 72, I think it's going to have a decent run. I think it's got a decent run in it. I don't think it's just going to be a small break.
No, I think it'll be quite big, especially with the setup. A lot of it, remember, we don't just say patience, react, don't predict. When it comes to day trading or even investing, it is a moral. I think it's a way of living in terms of trading, because your patience, when you see the traps, when you see setups that replicate, that becomes such a powerful concept. So for me, Bitcoin is certainly something, and also that silver that we looked at before as well. All right, Ty, well, we'll go over to some questions here, and one of the questions we've got coming in is from I think a Zish Pezza. Sorry if I mispronounce your name there, sir. And he said, what is approximately your minimum size and amount you risk? So if you're talking in a broader term in terms of what your account you should be risking, generally speaking, you should be going between about 0.5% to 1 to 2% risk per trade as a day trader, scalper, or swing trader. Obviously, you have aspect of, with Pepperstone, you've got CFDs, and CFDs give you the ability to use some leverage to allow you to place micro transactions. Actually, you can place small trades as well, but make sure the risk is appropriate. So that's what I think is really, really powerful about it all. But a broad rule of thumb would be around there. Now, in terms of, therefore, what's my minimum risk or what's your minimum risk or anyone else, well, it's just going to be on the size of your account. So if your account's really large, then of course your risk technically is more. But it's about talking in percentages, and I think Ty would agree with that. In fact, for a long time when we started, hid the amounts because sometimes they were getting a little large, and you didn't want to look. I didn't like looking at the amounts.
Absolutely, and you know what? It was actually a key learning, and we do a lot of mentoring, and really a key learning was actually making it percent based rather than dollar based. So when you look at your profit and loss, it's actually in percent. So it calculated it for you. I'm not even sure if TradingView does it. I know MetaTrader used to, but it was a very powerful tool because it stopped you from focusing on the dollar rather than people can get very fixated by the dollar. I know, when we first started, on a Friday afternoon when the weekend was coming up, we were wondering, are we going to be having steak dinners for the weekend, or are we going to go to McDonald's? And you start to see the dollars tick over, and you think, I think I might take that. But from a percentage standpoint, it might have been a very bad move. And now looking back, I mean, it's kind of funny. Like we talk about temperament being a key to trading success now, but if you had have told us that back in 2008 when we first started, we would have laughed you out of the room. It was a case. It was all about the.
Sure. It was all about the mighty, and you know what undid you? You'd always look for that round number. Let's say it was $1,000 or $5,000 of profit, and you'd say, "I got to get to 5,000," and you put this dodgy risk trade on to try to get $300, and you guess what happened? You'd end up losing probably thousands of dollars. So it was a stupid concept. Always focus on risk ratio, so risk reward ratios and your percentages. So
absolutely. Important. It's a business plan, right? Look, we don't want to hop on about it too much, but really it's one of the most important things when it comes to trading. If you buy a milk bar and you don't know anything about it, you're not going to go out there and buy 10,000 liters of milk in the middle of winter because you think you want to sell a lot of milkshakes that weekend. You're going to look at the statistics. Is it going to be hot? Are people going to want milkshakes? You're not going to have a guess at it. Okay, it's the same thing. You're not going to invest your hard-earned, buying products that aren't going to move. Just like you're not going to invest your hard-earned on a whim, thinking that this is the one that's up the risk, Tom. I think this is the one. We're looking really, really good here. I think this is a 10% trade, so let's really go for it. That is a very, very bad way of looking at it. You really want to keep your emotions in check, because if you do that, it's going to go a long way to your trading success. Very, very important. One of the most important things. Trading ability comes secondary to temperament and patience, to be honest, because many a good trader, we've seen them have come undone and gone completely, bangers on their account because they didn't have the discipline to follow through.
Absolutely, they really don't. It's one massive important figure. So great thing in today's session. Last one, I guess we'll end here, Ty. Tesla, very choppy market. It's been sitting with a huge amount of daily doji. So you can see here a lot of days the doji. Now, it may look like it broke out in the last 24 hours. It didn't, though. Not yet. So you can see it's still held up and it's still closed above 170. So between 170 and 182.50 seems to be a very large kind of amount of consolidation in the options world as well. And that's being represented in the charts. So a break either of, I think, about 167 on the downside or 182.50 on the upside could have some, I think, explosive moves for Tesla. So another interesting one on the charts, and certainly something that I've got alerts on both sides, just in case.
It is proving to be a very interesting level, that $10 range. So one to watch. And I think you're right. A break either side is going to see some fireworks, I think. And it might take more than a tweet from the great man to stop it.
Yeah. Well, look, here's just 3 weeks of dojis. I mean, it's kind of rare to see those. That means heavy consolidation, basically.
Yeah.
All right. Well, thank you so much for joining us, guys. If you're interested in finding out more about the fact that we do this every single week for Pepperstone, you want to keep joining us, then look in the description down below. And of course, make sure to fill in your details so you get the alerts when we go live for this. We do it every week on Wednesdays, so make sure to set that as a bit of a thing so you can come join us and talk about markets. CPI comes out at 8:30 a.m. New York time, which is only a few hours away. Then you've got 2 p.m. for the rate decision, and then 2:30 p.m. New York time for the press conference, which tends to reverse a lot. So just be careful. The press conference can be the most important bit of information because that's where they try to reverse everything. But yeah, Ty, any words of wisdom to end with this week? I think we've given some big ones out already, so it's been a good session.
Yeah, it's been a big week. I think the best thing you can do is go back and watch this webinar again. And some of the tidbits that we talked about tonight may not seem important, but they're the most important things that you're probably going to learn in your trading journey if you're only just starting out. And for those of you seasoned traders who follow us on a weekly basis, we know you know the rules, and this is why you're still here. So now we appreciate you joining us week in, week out, and we look forward to coming back next Wednesday and seeing what the market gives us again.
Absolutely. I've got one, Ty. I read it on Twitter. I thought it was pretty cool. So someone asked somebody, what's the best trading book you've ever read? And the person said, my trading journal. I like that one. It's probably true too. All right, because that's understanding your own psychology. All right. Thanks so much, guys. Bye for now.
Thanks, everyone. Yeah.